Yeah, man. Good morning. Good morning. Welcome to the daily money markets. Again, it's a daily trade analysis. What we do each and every single day. Just to try to analyze the trades and see the opportunities, which opportunity we can jump in, and be able to actually make some money. It's actually a big day if you look at it today. It's a big day in terms of consumer price index. There's a consumer price index that is happening today, CPI from United States. We're expecting a lot of volatility to happen in the market already. If you can see the chart, already things are starting to happening. People that are already in the market right now, they're actually making some good profits. So without actually wasting time, as we always do, we firstly go, to look about, the fundamentals that we have, right? The news that will bring the high impact volatility, like the one that is happening right now. We're going to see what exactly is driving all these candlesticks to move like this at this particular time. Very, very important, before we get into a trade itself to analyze. So, all right, when it comes to high impact volatility today, Tuesday, Feb the 13th, in terms of China, there's a bank holiday, a lot of activities when you look about the Chinese products or Chinese instrument in the market. NZD, New Zealand, early in the Sydney session, they had inflation expectation, which are happening 4:20 a.m. Right now, it's 7 minutes past 9. The news in GBP, they just come out. It's a climate code change. That is why we see that instrument having a high impact volatility is because of, the climate change that just come out. I'm seeing also the news on CNBC, on a Bloomberg, all of them, they are preparing themselves about the CPI, giving the expectations and, actual that will come out in terms of the CPI. So later on 9:30 a.m., 30 minutes, 22 minutes from now, we're going to see the CPI from Swiss franc, another instrument that we can look. Swiss franc, I think we're going to see a volatility there. Again, all the way to it's Swiss franc, it's a CPI, all the way to 3:30 p.m. later today. That's where there's a big one. It's consumer price index from United States, month to month, year to year, and the core CPI month to month, year to year as well. So that in terms of the high impact volatility. There's other news that German new economic sentiment, EU economic focus, and employment rate, average earnings indexes. Those are not that much in terms of driving the market. But the ones that I mentioned, these are the big one in terms of, high impact volatility and how it drives the market. So, right. So we're going to get into the trade immediately. Immediately, we are looking at the UK100. The reason why we are seeing this high impact volatility is because of that news that just come out from Great British Pounds in terms of climate change year to year. So, of course, first of all, we can zoom in terms of, a high impact volatility and on a bigger time frame, right? As a day trader, we go on a 4-hour. I'm removing this because I don't want when you're trying to, read this thing and it confuse you. So what I did mostly is to highlight here where the market has been playing around, and again, highlight down there where the market has been playing around, and then we see that the market is coming from all the way a higher position. But there's these positions that a market hasn't been covered yet. If you look at it from 24 January, in fact, from 16 Jan, that's where the market was at this bottom, but it hasn't covered all this range. So you know how the market works. We always say that the history always repeats itself. At some point, this market has to come and touch at this particular time. So we're not sure that whether it might start maybe pushing from this side, then it come to push to this side, then it come to push all the way to, just to make sure that, you are not over risking, but you're having the steps in terms of where you can put your take profit and the stop loss. So when we go to 1 hour, 30 minutes, again, 15 minutes, you can see it put us on a range. This is where we enter our markets, execute the trade. So definitely it's a short sell that will push the price to 7,572 when it comes to UK100. It might come anytime soon, but again, we are looking at a bigger time frame that it might come to this side and start again going all the way up again, recover the whole volatility that will push here. It might push the volatility to here and then form another type of a candlestick and recover all this volatility to that side until we saw, a sign in terms of breaking, whether it's breaking up or breaking all the way down. For now, what we do is to follow the volatility. Definitely, it's coming to 7,572. You can even take it from 7,572 all the way up to 7,604. Couple of some move, couple of money that you can be able to make right there. All right. So jumping into next instrument, it's a Euro USD. Is because of, again, we're gonna see, we are expecting to see a lot of volatility when it comes to Eurozone and as well as to United States dollar, right? So Euro USD, it's actually a perfect instrument to actually look into it. That gives us a little bit of an idea how the Eurozone is gonna perform, and again, how the United States dollar, it will actually, perform. So again, we can be able to put our time frame on a higher time frame. So this is the range where I did before. So we can see that the market hasn't been actually, able to get to this level. But there's a couple of moves. It can come here, break to this side, and pushes the price all the way up. But definitely, we are actually anticipating a buy. The way I'm seeing here, this is actually a buy position. Or I can say a bullish position. Okay. All right. So anticipating a buy position from that range, at least it can push the price all the way. If you put take profit number one here, you won't be wrong. You won't be actually wrong. You'll be actually, save yourself, help yourself also to identify some key levels or key range. So you can put a take profit number one on that level. And then once it come here, you add more trades, you enroll more trades so that you can have more trades up here. And then this is the higher possible position that we are anticipating the market to get here. So it's very, very interesting. If you can see the market, they're actually on a range where it can't go all the way to the higher position, but there's a high possibility that it might turn back again to this side because of there's a lot of volatility news that are actually happening today. All right. So this is Euro USD. The other instrument that I have to look, let's look in Swiss franc. Maybe we can look Usdchf, United States dollar versus Swiss franc. Again, they're having CPI today. The way I'm looking at it already, very interesting, very, very interesting. I think if their CPI become positive, maybe they might push the price up there. But because of we are gauging this instrument against the United States dollar as well that are having CPI. So that makes it really, really, interesting when it comes to trade this instrument. It's actually having already volatility. So I'm thinking it's quite, a bearish movement. It might push the price all the way to this level. It hasn't been here it hasn't been actually this zone for quite some time, but just to be on a safe side, you can be able actually, to put your take profit number one somewhere around here, take profit number one. In fact, let me try to enter this trade while I'm with you guys live. Okay. 0.2 because of risky parameters. All right. Enter the trades. So I'm anticipating my take profit number one here, and then coming the take profit number two somewhere down there, somewhere here, So what it means is that if my trade comes here, I'll be already in profit. So what I'll do, I'll enroll or add more trades on it. The more I'm adding more trades, if it breaks at this level, actually I'm getting all the way to this level. I'm gonna have so much profit that I can be able to accumulate from there. So this is Usdchf. Looks again very interesting in a range. That's a very first key point. Make sure you gauge your market in a range. This couple of range, this is a big range, but also you can decide to do this. You know, you can decide to say that, okay, this is where the market I'm thinking the market will come here and it won't break going all the way down. It will go all the way up to 0.87709. So what you need to do is just to monitor from here once it gets to 0.87459 and see if it will be able to break. If it can't break, if you see it's resisting and forming another candlestick going up, you must always know that that the price market is going to 0.87709. So yeah, that's some that's some opportunity, my brother and my sisters, to actually, you know, jump in the market, in the forex market, and make some money. So I don't know, people, they say this thing is difficult. This thing, you know, it's difficult to analyze. I don't know why you guys you give people money to do it for you, but look at it. I just entered the market now. The trade is actually coming close to where I enter. Once I'm I've already break even. I'll be breaking even. Then I'll be entering on my profits, on my profit zone. So this is Usdchf. This is actually Usdchf. All right. So what other instrument can we look? I think we can look gold, because today it's a big day in terms of CPI. So we can look also to gold and think where the market is actually doing. So probably when we go on a bigger time frame, I think gold for now, it'll pushes the price to this level, right? This level. Maybe I can indicate it differently. Okay. This is where the market wanna go in terms of gold. Pushes the price to here, and then it will start again dropping to where it is. Maybe we can move this one to this position. So it goes here, come back, play around, wait for CPI, pushes the price down all the way to this zone, all the way to this zone. And then from there, later on, starting push the price. By the time we get tomorrow, we might find it's sitting on the middle, or we might find it sitting at 2026 above. Right now, it's fighting to get to this position where actually, you know, it's been there before, because it's already break everywhere else we're supposed to reverse. So obviously it has to go and touch here. Once it touches at that zone, that's where it's going to come back. And you can see it's quite clear, you know, opportunity that you can jump in and actually, you know, execute the market and come with it all the way down to 2017. You know, from 2017, you can take your profit, you can relax, and then wait for it shows the signal that is going all the way up, or it's breaking to come to 2012. So that's how I'm thinking about gold, how it's going to perform today, starting right now and moving all the way to you know, consumer price index that is happening from 3:30 p.m. South African time. Here. All right. So because of you know, it's US CPI, maybe also it's wise we just go and look into the instrument that we always look. It's Nasdaq and the US and NAS100 and the US30. But maybe we can start with the S&P 500. The reason why we're starting with the S&P 500, S&P 500 breaks the record. It went all the way above 5,000 as a price share in the stock market, you know, from last week, Friday. So from 5,000, we saw it, you know, it pushes the price all the way up to reaches 5,050. And let me see the highest that it went. So when we go to a bigger time frame, the highest it went, it was 5,000 and pretty much 5,050. So it tried to push, the price down. Right now it's sitting at 5,019, which is not bad. It already break the positions of 5,000 flat, which is all-time high in terms of this instrument. What are we expecting this instrument, to perform today? The other interesting part about this instrument is that S&P 500, they have the division where they call it S&P 500 Future, where they measures the value of the companies in terms of the earnings or in terms of calculation of GDPs for specific company. So they're like, what do you call that company? Here there was KPMG, they get kicked out. There was Moody's, Moody's, it's one of the companies. So S&P, they do have that. Then they do have S&P 500 stock, whereby a couple of companies they're listed in that S&P stock, right? But they're the ones that measures as well, the growth of the companies individually or the downfall of the company. So we have seen for past 2 weeks, most of the companies are releasing their earnings and actually doing really, really well. So we are, that is why we saw the S&P 500 goes all the way, breaking the all-time high to 5,000, all the way to 5,050. All right, hey, my voice is getting fade away, guys. Let me get water. All right. All right. So the way I'm actually anticipating is that at the moment, S&P 500 is still, this is really, really tricky trade. According to all information that I know, it still gives me a little bit of, a challenge. Do I think it will push the price down? No, because of a lot of companies, they're already in profit. They already, reported the good earnings. So there's no anything that we see it will drive this instrument at particular time to go all the way down. So I'm thinking it's all the way go up, recovering that 5,047. From this week going upwards, we might playing around from 5,012 to 5,047, somewhere around there. If it has to drop, then it can break, but the possibility is 4,995 or 92. It won't go about below those numbers, to go to 4,000 and 4,500, for example. I don't see anything that is, actually happening in a global economic now or today that will drive S&P 500 as an instrument to pushes the price below 500 mark, 5,000 mark that they actually get as all-time high. So yeah, that's what I'm anticipating in terms of S&P 500. Goes all the way up, come back, play around. It might break, but the highest, if it breaks, it go all the way to 4,995. All right. The other instrument, we're looking at NASDAQ, NAS100. We saw also NASDAQ, this instrument goes all the way up and up and up, reaches 18,000, 17,954. These are all-time highs. It haven't been, NASDAQ to reach at this position. And I'm thinking maybe the investors, they want to push the NASDAQ to get to 20,000. It's never been in a 20,000 mark. These are all new heights that, this instrument in the stock market, they are actually, creating it. So yeah, possibly moving to June, July, if things are going to, performing the way they are performing with the geopolitics mixing with the elections, Trump coming in and start, throwing some bombs and so on and so forth, we might see the stock like this, because these specific stocks, US30, NAS100, and S&P 500, they are friends of Trump. Every time when Trump says something or jumping in a, in a politics and say something, we saw this instrument rising up and up. The first time this instrument get to 15,000, it was because of Trump was president and was speaking something else, and goes all the way up. So anyway, regarding the, the technical analysis, I think the price, maybe it might drop to 17,493. That's what I'm anticipating. I've been on a loss for these trades because of it's been going up and up, you know. Was really, really sad. I was anticipating this instrument to drop, but hey, you can see my orders, you know, keeping going up and up and up. So again, I'm not giving up. I'm anticipating this price to come all the way to 17,493. Of course, the reason to recover so that I can recover my loss. But again, another reason is just the way I'm thinking. The market, it might be performing today based on the consumer price index. The following, it's actually, you know, US30, same thing that I'm thinking, the price to come all the way to 38,596. If it has to break from there, then there's a possibility of 38,500 that S&P, that US30, it might come, it might get all the way to 38,500. That's the possibility that I'm thinking. So, all right, man, that's it. That's it, you know, about the market. Thank you very much for tuning in. We actually, you know, keep subscribing though, man. Keep in touch.